$120 billion. That's how much money the Federal Reserve plans to pour into financial markets every month. It'll keep this tap of cheap cash open until the U.S. economy rises out of its deepest slump in a century.
We'll be looking for employment to be substantially closer to assessments of its maximum level and inflation to be substantially closer to our 2% longer run goal before we start making adjustments to our purchases.
Known as quantitative easing, the Fed's purchases of government bonds and long-term securities started in March. Its goal is to encourage new investments and loans to keep the economy afloat during the coronavirus pandemic. But the flood of liquidity has had unintended consequences. One of them is the surge in the price of cryptocurrency Bitcoin.
Retail investors, and more importantly, institutions and corporations, they're shopping for a new currency. Okay, they want a currency that gives them purchasing power to protect them in case paper currencies fall, because central banks have to print more and more money to help the world survive the virus and social disorder.
The price of each virtual coin breached a record $23,000 this week. It's up more than 500% from its 2020 low of $3,600 in March.
The Fed prints money and asset prices rise.
Analysts say the boom tracks what's been happening in broader markets. Major U.S. indices are trading near record highs thanks to the abundance of cheap cash and low interest rates.
With recent news of the vaccine and generally more stability brought by the results of the presidential election, there is also this view that it is moving in sync with the broader financial markets.
As investors scoop up Bitcoin, it's also gaining mainstream acceptance. PayPal says it's adding the asset to its currency options next year, and Visa has launched a credit card that rewards purchases with Bitcoin instead of airline miles or cash rebates. Analysts say that means prices could rise further, with or without help from central banks. Paolo Montecillo, TRT World.
For more, let's go to Daniele Bianchi. He's an assistant professor of finance at Queen Mary University in London and specialises in cryptocurrencies. Welcome to the program, Daniele. Now, as we heard in Paolo's package, it reached a low of $3,600 in March, and in the space of several months, it skyrocketed past $20,000 per Bitcoin. Is it actually worth that much, and why have investors poured in right now?
Well, thanks for having me, first of all. I think one of the main driving factors here is institutional investors. I'm not super sympathetic with the view that inflation expectations, at least in the short term, are driving investor demand. What I really see here is big professional investors that are coming into the marketplace. And we know that prices of Bitcoin are basically interaction of supply and demand, and everything is driven by demand. So it's natural to expect an inflating prices. So I'm not really surprised to see Bitcoin to 23,000 by today, to be honest.
Interesting. Now, I'm just looking at other financial assets, such as hard currency, gold, oil, or any other traditional form of commodity or asset. If any of them were as volatile as Bitcoin, people would be running a mile and people wouldn't be touching it with a 10-foot pole, because you cannot rely on the stability of an asset that fluctuates like that and so quickly. So why should people trust in Bitcoin?
Well, I mean, as I said, so the average investor that invests in Bitcoin is a niche type of investor, meaning that those are believers at the end. There are short-term speculators, obviously, but if you look at the ownership and the ownership concentration of Bitcoin and the length, how long Bitcoin is kept in different wallets, those are people that tend to keep Bitcoin for long periods. So which naturally overcome the fact that it's a highly volatile asset. And we have to keep in mind that Bitcoin is 12 years old. I mean, it's been introduced in 2028. So volatility is decreasing over time, but it's obviously higher than other asset classes. But we have to keep in mind that other asset classes has been around for much longer period of time. So it's just a matter of time, and I believe that volatility of Bitcoin will substantially reduces.
So it was obviously $3,600 in March, now it's $20,000. Does that suggest that perhaps there is a lot more speculative investment going on and that it's actually the first sign of yet another bubble in this cryptocurrency?
Well, I wouldn't be surprised if there is a shorter bubble. But again, we have to keep in mind that few years ago, no institutional investor except few small closed-end hedge funds were effectively investing in Bitcoin. And now you have instead large institutional investors such as Fidelity, for instance, or well-known hedge fund managers that are actually putting large sums, large money investing in Bitcoin. So you have a natural, the market is maturing, is becoming more institutionalized. You have more professional investors coming into the marketplace, and this will naturally translate in a probably long-term upward trend. But definitely there could be short-term drop in values or retracement, if you wish.
Okay, well, let's see how much higher or indeed lower Bitcoin can go in the coming days. Daniele Bianchi, thank you again for joining us on Money Talks.
Thanks for having me. It's a pleasure.